Guys, this is your center line. Yesterday we got the bounce. Once more, look at how Bitcoin was up here and then got turned down and pushed back. Why did Bitcoin go back at that point? It seems like all you do is look at the stock market, right? The stock market started out near the flat line, but then it dropped and ended the day at its lowest point. Bitcoin went up, then down and ended the day at a low price. Okay, that same kind of behavior with assets that are at risk was going on. Stocks and Bitcoin are both up a little today. To be honest, it looks more and more like that. As long as the center line stays in place. You keep a neutral to bullish bias, and the upside goal could be 68,000. If it really does fall below the pivot line, it will likely go down to 52,000 or even 49,000. Bitcoin bubble stands out because it is clear and easy to understand. There's no limit to who can join, no matter how much they know about crypto or how new they are to it. Guess who is watching us now? The author of the best-selling book Rich Dad Poor Dad. Hey, Robert Kiyosaki, you poor dad. We want to make the most of this chance. Thank everyone who put their trust in us. The best part is that it's free and we read all of them. If you sign up now, you'll get all the new information for free. Stay ahead of the trends instead of just following them. Sign up for Bitcoin Bubble right now and enjoy the new edge. Let's talk about these things and more in this film. There isn't much going on with gold today. I'm just hanging around the flat line. This has been my level. Remember that I told you guys a month ago that 2660 would be a big problem. That's where it stopped when we got there. I'll say that it's holding up pretty well now. It's like when you hit a trend line of resistance, you get a huge reaction. Okay, it goes like boom, and then there's a big slowdown. Okay, this is what we're doing a lot more of these days, which is good. It's putting the move together and digesting it right now. It doesn't say that we won't go down to 2,500, but it does tell me that there will be more upside in the long run. I still think you should get a little flush out of the weak hands and a drop to $2,000. Again though, there's no guarantee that my point will become my goal, my upside target. My next upside target is $2,710 and then even $3,000. And I do believe we will get there in the end. Silver, guys, let's quickly look at silver. Silver is still coming back in here, I think. The downsloping trend line went back to the crime scene again. As you can see, I've already added lines to this. This was still the case for me last week. I can just move them a little. I still think we'll go down from here and then your next big move will begin. Do you see the wedge pattern? If you look back at the scene of the crime, this is a standard breakout of a wedge pattern. Also, kaboom is a scientific word. That's not true. Okay, last but not least, let's talk about us oil. Check out what we have there. A little bit of oil is pulling back here. You guys know that I had a small short on oil, but today was a beautiful pullback. In fact, we added to our short position in smart money stocks and ETFs yesterday. This means that we are now even on the money for that. Good thing about dollar cost averaging, people. Great thing about dollar cost averaging. In times of global instability, investors are turning their attention to stocks and cash, making it hard for Bitcoin to break through $64,000. Even though it had short-term gains, Bitcoin is still being turned down at the $64,000 to $66,000 mark. Mainly caused by situations in the world's economy rather than worries about the US budget. Conflicts in the Middle East and elections in the US are making investors afraid to take risks, which is slowing Bitcoin's rise. The DXY index went up to 102.5, which shows that the dollar is getting stronger as buyers pull their money out of foreign currencies. This makes Bitcoin's rise even slower. Since October 1st, a lot of money has left the Bitcoin spot ETF, which slows down the market's upward trend. The yearly premium for BTC futures stays at 8%, which shows that demand is equal between bulls and bears, but not very strong. Bitcoin's inability to break $64,000 is a sign of larger macroeconomic and political unpredictability. When markets are volatile, investors choose safer investments. This happened yesterday, right? So yesterday started out rough, going from sideways to lower. That was something we talked about yesterday morning. Following that, there was a bigger drop in the latter part of the day. In the middle of the night, prices moved sideways, but at 4 a.m., buyers came back and pushed prices back up. So it's interesting that we're kind of stuck here at a point where we're up for the day, but not making up for the whole drop from yesterday. Listen up, the drop yesterday wasn't that big. In other words, 1% on the Nasdaq and 1% on the SP. But it was interesting because it happened right after that huge rise. Let's look at the daily chart now that we're back here. This was on the jobs report last Friday. If we look at the daily chart, you got the jobs report pushed up. Why did I tell you that that move went wrong? I want to show you this one more time during the day. I am going to stop dealing before and after the market opens. But let's come back to this. This was so fishy and I've seen it happen a million times. The SP 500 data for the last 10 minutes is now shown. When the market opened on Friday, it went down for the first hour. Take a look at the time range too. Take a close look at the time range. You can see it at the bottom of the screen. The market stopped selling at 10:30 a.m. to the second. So what does that tell us? We do know that banks like to sell early in the day because that's when there is the most activity, right? That means they are the ones selling and then dumping. But by late afternoon, especially on Fridays, there isn't enough business for them to make it worth their time to unload. Right then, it doesn't matter if they're only going to sell 100 shares, 1000 shares, or even 500,000 shares. They do it early in the day when most people are shopping in stores, which is again the case here. We opened up and talked about this on Friday. If we look back at this, I've talked a lot about how the story has to stay positive until they get out of enough of their situations, right? Until they pretty much give their jobs to people shopping. That's all there is to it. Following that, what takes place on Friday? Okay, so from that point on, it went up. And then late in the day, there are no organizations at all because it's already the weekend, right? The big boys leave early for the weekend, and then look at that right up there. That's why it was interesting to see that on Monday things went the other way and there was some late day selling. Then of course we're coming back in with this reemergence, our attempt to revive this bullish story in the charts. It looks like we have a slightly good open here. Again though, most of the rise since last Friday's jobs report is now gone because of yesterday's sell-off. Okay,